All right, welcome to the show, everybody.
All right. Another volatile week.
Oh, and you.
I gotta stop saying that, but
Well, you got to say it if it's happening.
I know.
You can do about it.
I know. Interesting times, no doubt about it. Strangely, Bitcoin is super volatile too. The last few weeks, I don't know. I don't know how. I mean, if you're a day trader, you're making a killing if you're on the right side. But if you're in a 401k, you just got to ride it out one way or the other.
Yeah. Yep. We're in one of those times where if you're in, stay in. If you're out, stay out.
Yep. I agree.
Sitting on the sidelines watching is not a bad thing.
No. I mean, as rates go up, right, because that was the big pop on Tuesday. What happened on Tuesday? I'm sure I got it in here somewhere. But the market gapped down at the open and yield like skyrocketed, and yeah, it's just interest rates and the dollar. It's really all it comes down to, this whole thing. But we're going to talk about the dollar today because we're doing a little bit of a deep dive into the Fund, which may be making a resurgence. We shall see. All right. So look at what happened this week. The Fed versus the White House. Fed's in a trick bag. Can't lower rates because inflation. Oh, I remember. So CPI came out on Tuesday, and it was way higher. All the subcomponents of CPI were way higher than what anybody expected, and so interest rates jumped. The market gapped down at the open, and it recovered throughout the day, but gapped down at the open. But that morning, I think, or the night before, one of the two, Trump had tweeted that he wants rates to come down, and knowing for sure that the CPI report was going to be way hotter than what the street expected, and so he's telling, Powell that he wants rates to come down, and Powell's looking at inflation going up, and he's going, I can't lower rates. So we'll talk about that a little bit. Anyway, and the Fund definitely potentially making a resurgence, and then the TSP fund charts. So Monday, consumer inflation expectations, it was flat, same as last month at 3%, but it was forecast to rise 3.1%, so that's kind of good. It was falling a little bit. S&P was up 0.67%. Tuesday, NFIB Business Optimism Index dropped from 105 to 102, which is not great. Uncertainty and inflation, definitely the two biggest concerns on there. And then the Fed came out and was testifying in front of Congress, basically citing economic uncertainty and inflation, which was a lead up to Wednesday's CPI. But S&P was basically flat, was up 0.03. But that business optimism index is actually pretty good. Fell to 102.8 in January from 105. Not that big of a deal. 105 was the highest since October 2018. So overall, small business owners remain optimistic regarding future business conditions, but uncertainty is on the rise. Hiring challenges continue to frustrate Main Street owners as they struggle to find qualified workers to fill many open positions. This is so many overlapping and contradictory data points. I don't know how people try to sort through all this stuff. Meanwhile, fewer planned capital investments, which is not good, right? If companies aren't investing in their own companies, that's not a good thing as they prepare for the months ahead. So uncertainty is definitely where we're at. Okay. And so Wednesday was core inflation with CPI. It doubled from December. So from last month, it was up 0.4. It was up 0.2 in December. And the forecast was to be up 0.3. So we'll take a look at that. But the mortgage rate dropped to 6.95 from 6.97, which is good. And applications, new mortgage applications were up a little bit. But the S&P gapped down at the open. And finished XX. I didn't go back and put that in there. Finished basically, I think, flat for the day on Wednesday. But this is a chart of CPI. So it's been definitely kind of stable, in there at going up 0.3 a month. And if we start moving higher, this is the fear of the Fed. If we start moving higher again on CPI, it's inflation coming back. And this is kind of crazy that the Fed has been lowering rates. Actually, not kind of crazy. This was the concern. When they start lowering rates, they're worried about inflation increasing, and we're starting to see it. So we'll see. And then we're doing this show we're recording a little bit early. It's Thursday instead of Friday morning, so we don't have Thursdays and Fridays. But Thursday, initial jobless claims came in lower than last week at 213,000 versus 220,000, which is good, right? So unemployment is not getting worse. PPI was not bad. CPI was really bad, and that's what we pay, the inflation rate that we feel. PPI is the producer price index inflation. That's what companies that produce the products that we make feel, and it wasn't that bad. So the market actually a little bit before the open is up a little bit. And then Friday we get retail sales numbers. Okay, so Fed versus the White House. So this is an article from CNN from the other day. So America's central bank is in no rush to slash interest rates anytime soon. That was Powell talking at a congressional hearing. Faced off a barrage of questions about the Consumer Finance Protection Bureau, tariffs, and Doge. So on interest rates, Powell's stance that the Fed ought to hold rates steady jibes with those of other Fed officials and also with Wall Street, which is betting that interest rates will be held steady at the Fed's March meeting, according to futures. So he says, with our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. So he's saying he does not want to bring rates down because he's worried about inflation. And this was a Reuters article. So Trump on Wednesday says that interest rates should be lowered, and that would go hand in hand with his upcoming tariffs, despite economists' expectation that tariffs would fuel inflation and postpone rate cuts. So all the things he's trying to do, from his perspective, is going to lower rates, and so is going to lower inflation. And if inflation comes down, as he expects, he wants rates to come down along with it, which they will if inflation actually does come down. So Trump substantially raised tariffs on steel and aluminum, imports on Monday 25% across the board, in hopes that will aid struggling industries in the United States. Interest rates, so this is what he puts out on Truth Social, like right before the CPI comes out. Interest rates should be lowered, something which would go hand in hand with upcoming tariffs. So it's going to be interesting to see. He can't fire Powell, and they're really not that far apart. I think it's more kind of bluster in the media than anything. But right now it's hard for Powell to lower rates because inflation is definitely an issue, and there's a lot of people that think that tariffs are going to be very inflationary. So again, that just all goes to the uncertainty. Okay, Fund Resurgence. So we would talk about it all the time. This is the beginning of the iFund in 2021. It's when okay. So let me just make sure everybody's clear. Usually we have our own iFund. Like the iFund is different now than it was. What was it? 2024. I guess they went to the new iFund. This is in TradingView. This is the Europe Asia Far East Index. This is the old iFund, but it's close enough for our purposes. So this is the iFund.
And you're going to show the current real iFund at the end?
No, I didn't do it. I did it in TradingView. So this is the Europe Asia Far East Index in black, but it's close enough, and the S&P 500 in red. So back here at the beginning, you got the iFund way outperforming. Right, this is on a percentage basis compared to each other from this starting point. So you get the iFund up here at 100. 125%. And you get the C fund down here, S&P, at like 30%. So there are definitely times when the I fund way outperforms the C fund. We haven't seen it in a while, but it exists. And so once we had this cross in here in 2012, 2013, pretty much the C fund took off, and so obviously right here was the big break. The I fund rolled over, C fund kept moving higher, and that was it. So from a long-term perspective, that's where we are. And the I fund has never gotten back above its high from 2007. But the C fund obviously is way above it. So this is what the I fund looks like kind of on its own, going back to the same time thing. So those we've talked about it a lot before on the show. A lot of people made a lot of money in the I fund, and then it collapsed. I mean, like crazy, like almost 90%. This was a huge run up, and if all you had to do, seriously, all you had to do was connect the major lows, and if you didn't see that this was a significant trend change, I don't know what to tell you. Okay, so then we're oscillating along. Obviously, we're going up, but not anywhere near as much as the C fund was going up. And now we're, trying to challenge the prior high. So if we can get above this high, they call it blue skies. It's new all-time highs, and this is I don't know how many years is that? 20 almost. I mean, this is a 20-year base. So when it goes, it's gonna take off. So kind of why am I bringing this up now? This is the ratio chart. So how do you know if you want to be in the I fund versus the C fund? You look at the ratio between the Europe Asia Far East Index and the S&P 500 Index. So when this line is going up, the numerator, the I fund in this case, is outperforming the C fund, the denominator. When the line's going down, the C fund is outperforming the I fund. And so right now, maybe we're starting to turn the corner, right? After whatever, almost 20 years or 18 years of underperformance. So if we zoom in a little bit, since the end of last year, this might be a little bit hard for people to believe, but it's just it's just a ratio. It's math. It's not an opinion. The I fund has outperformed the C fund since the end of last year. Now, whether or not what we're really looking for is, okay, maybe this continues a little bit, we get a little pullback, this is a higher low, and then we keep going, and now we have a new trend, and the I fund is outperforming. We get a lot of that. There's a lot of little, outperformance, but so we definitely need to see this overall trend, break and get up here, and then, then the I fund is outperforming. There's no way around it. It comes down to the dollar. Okay, so this is the I fund I fund's in red. The dollar is in black. So when it's almost a perfect inverse correlation, right? When the dollar goes up, the I fund goes no. When the dollar goes down, dollar's in black, I fund goes up. When the dollar goes up, I fund goes down. Right? All the way along. And so where we are right now, you get the dollar having broken this trend right there. Maybe the dollar keeps going lower and the I fund definitely keeps going higher if that happens. And so this is the kind of the long term of the dollar. So you can kind of look at this in a couple of different ways, right? We got this channel for the dollar. So can it keep going higher? Yeah, it's possible. It can stay in the channel. It's arguably the most likely thing that happens. But if the dollar just rolls over like to that, and even if it came to the bottom of a channel like that, that would be a big move up in the I fund. So that the dollar is definitely something you want to watch. Okay, and then I'm pretty sure Trump's policies, the idea is that a weaker dollar is like what they're trying to do. So everything is pointing to the iFund going up. Okay, TSP charts. So this is each one of these ticks is 1 week of price action. This is the 20-week moving average. We got the relative strength indicator and the MACD. So on a weekly perspective, this is getting to be a pretty long sideways channel. We haven't seen anything like that in quite a while, actually, since I was going back and I was going to put up a chart of a little bit longer one. It was 2019 where we saw the last time we had a pretty long churn after an up move, and it broke to the upside. All the other times it broke to the downside. So, but all the other times are basically like it tops and then rolls over, right? It topped and rolled over. This is a pretty long sideways channel for the index, and you get declining relative strength, as price is trying to break through. So if relative strength can pick back up, we can get up here to 6,100, 6,200 and keep on going. But we shall see. S Fund still trying to get, it's in a double top right now. If rates come, so S Fund is having a tough week because rates went up, and if rates keep going up, it's really bad for small caps. So S Fund would go down, but the S Fund and the I Fund, both of them, they're so undervalued versus the C Fund now. That's why a lot of people are saying are moving out of U.S. equities. One of the arguments is to move out of U.S. equities because they're so overvalued and they're so narrow with the Magnificent Seven. Things are starting to broaden out, but in the big scheme of things, the multiples on international companies and small caps are much better than the overvalued C Fund. So from a value perspective, if you wanted to buy and hold anything at this point, the idea would be, if you want to buy undervalued things, it would be the S&I funds and the F Fund, really, because that's really undervalued too. But the direction of the F Fund is a little bit different. I Fund, we have this triple top here. We got this top here, and if the dollar keeps going, the I Fund breaks out, gets past this top, past this one, which is a big one, and the I Fund definitely keeps going. And the chart setup is actually pretty good in the short term right now. This is a weekly chart, right? And we got above the 50 RSI a couple weeks ago. We just got, the week isn't over yet, but it would be the first positive MACD cross, which would be great. And this is an ABC correction to there, and a gap up and a follow through this week. So the I Fund looks better right now than anything else, any other charts. And the F Fund, just if rates go up, the I Fund goes down. And so F Fund took a big hit this week when CPI came out. Rates go up, F Fund goes down. If we get below this low, we're going to test this low. So it's going to be interesting to watch that the 60-40 portfolio is still hurting. And the G Fund we don't have. So, but it always goes up and to the right. Questions.
As always, if you guys have questions on anything you see on the show, you can put it in the comments section where you find the video. If there's no comment section, just shoot us an email. support@growmytsp.com, and they will get it over to us.
Yep.
All right, guys, we're going to be on the road for the next couple of weeks, so we're still doing the show, but we'll be doing the remote, virtual, whatever you want to call it.
Yep.
Still be here.
Yep.
See us every Sunday at 6:30. We'll see ya. You guys have a great week.
Later.